Um, from Yahoo Finance, almost everything is going wrong for markets right now. Da-da-da-da.
Woo.
Stocks came into 2026 riding AI momentum, a more stable trade environment, in hopes of lower interest rates. The S&P 500 hit record high in late January. Within two with 2 trading days left in the first quarter, the situation looks significantly more challenging. The stock market looks broken, and it's far from clear as to how to fix it. Well, in the short term, there's a lot of things you can do for the long term, but short term is what people want. The S&P 500 is down over 7% for the year. The Nasdaq is in correction territory. The VIX, also known as Wall Street's quote fear index quote, is trading at its highest level in a year, cresting the 30 mark. Bond yields are soaring. Gold is off $500 from its record high reached in January. Bitcoin is languishing near 65,000. Okay, so it's even less than what I thought. $65,000 per coin. International stocks are underperforming US stocks once again, and markets have taken the possibility of rate cuts this year completely off the table. A rate hike in 2026 now seems more likely than a cut. Geopolitical headlines continue to overwhelm the news flow, but this week seemed to arc toward either outcome towards either outcome of the energy front. And experts from inside the industry still think the risks from this conflict are being understated by markets. For the past 3 years, stock market bulls have led multiple levers to had well sorry stock market bulls have had multiple levers to pull to make their case. AI spending, earnings growth, and lower rates, chief among them. In 2026, these catalysts have lost their juice, and so many of the new developments across investors' radars, software getting replaced by AI agents, private credit, private credit funds getting gating redemptions, have simply added to growth list of negatives. There is a Warren Buffett quote for every market environment. Many readers breezing through this gloomy summary of the market will be quick to pull one of the most famous quotes. One most famous quote: "Be greedy when others are fearful." Quote. On Thursday, one of our favorite market voices, Truist, or one of our favorite. Okay, so finance, you have finance. Truist Wealth Chief Investor Officer Keith Lerner did did just the did just about this, telling clients in note that quote measured cash deployment is warranted unquote. This is wealth advisor speak for quote don't be afraid of the shock market unquote. Uh, Torsten Slock, chief economist at Apollo, argued the market's reaction to the U.S. Iran conflict is an overreaction. Disclosure: Yahoo is a portfolio company of funds managed by affiliates of Apollo Global Management. Okay. Quote: Markets are overreacting to what is likely a 4 to 6 week period of volatility, which has ultimately resulted in 50 years, which will ultimately result in 50 years of stability in oil market, supply chains, and geopolitics, unquote, Sloak wrote. In his view, inflation rates will be temporary. Rates will head the rates will head lower, and the AI tailwind for the U.S. economy won't be taken off course by this conflict. An outlook of what's happening in markets right now doesn't have much good to offer, but putting it all down in one place does offer a glimpse of what is needed to turn things around. And the slog outcome, let's call it, says that what risk assets the stock market, Bitcoin, etc., need to see in order to work again is at minimum stabilizing oil prices, preferably a decline in oil prices. Until then, we hold. Yeah, no bull. Obviously, I know they. I didn't. Obviously, I don't really read the articles beforehand. I just take notes on what I think. But they mentioned about like AI not being affected. We did an article last week about how the helium itself is already causing problems for what's it called, RAM or chip production, which is ultimately affecting the the AI circuit. Second of all, you and I also believe that AI is probably a bubble. People are overconfident in essentially software that they don't fully understand, and they're replacing their own employees with AI. And then I think somewhere I read somewhere that the like at least one company fired a bunch of people, replaced it with AI, then had to hire people back because the AI wasn't doing everything it needed to do. That might be a sign, if I had to guess anything. Um, Now I can't entirely fault the what's it called? Uh, they quote Warren Buffett with his what's it called? Let me look for it up. Oh yeah, be greedy when others are fearful. That's standard. Like,
Oh, I thought you were gonna do the the panic right now, sell everything,
no,
panic.
no, no. But I mean, in my mind, unless there's a world war, unless there's a world war, if you're holding for the long term, you should be holding, um, because again, the stock market has never dipped and never recovered. It has always surpassed its highest, and it's done that since like the
Ever,
start of our
since it
stock
was a
market.
thing.
Yeah, since it's a thing. Because people need to buy stuff. People need to have businesses. Uh, that's essentially what it is. As long as people are buying stuff, there's
When you
gonna be a
invest,
market. But
when you invest in the stock market for the long term, you are investing in the will of humanity itself.
essentially, yeah. But
Ancient Japanese proverb that I made up right now.
Confucius probably. Uh,
Confucius, most likely.
most likely. But yeah. And again, now that might be speculating on the fact that if there's the world ends, then yeah, sure, sell your stock now so you can buy enough alcohol and drugs that you don't feel the problems. But not financial advice. I mean, I can't fault the whole be greedy when others are fearful. Heck, you know me, when I play stonks, what do? Buy the dip. Like, it's my favorite thing.
Right?
It's
Always.
always buy the dip. Because worst case scenario, some markets, some stocks don't make it, and others will essentially eat my loss for me. I don't have to. But again, back to my notes here. So this whole everything's going negative. This represents a massive quote internal reassessment quote of value driven by profit loss by the profit loss system. In a market economy, prices act as messengers conveying bad news. When sellers exceed buyers and paper profits begin to disappear, it often triggers an immediate stampede to save what remains. These declines suggest that valuations may be the lost touch of with actual earnings, similar to previous debt-based bubbles, where wealth is destroyed as the market corrects for an overvaluation. I, I mean, I'm not entirely against that. Um, Again, we see decline and all this stuff. That just it's essentially because we live in a price coordinated economy. Um, it's just what we see here: S&P 500 down 7%, Nasdaq is in correction territory, VIX is the fear index is up. It All this is just telling the general public, hey, we think something is going down. We're yelling timber, like, and the people who do
You better
trade,
move, you better dance.
yeah, like, oh sorry, I was trying to think of the rest of the lyrics, but anyways, it's them
Let's
telling.
make a night you won't remember.
Oh, is that it? Oh,
I'll
man,
be the one you won't forget.
I just don't listen.
Whoa, whoa,
I just don't listen to the music much
whoa.
anymore. At least not as often as I used to. But it's just telling the rest of the people, like, hey, we think something's gonna happen. We're holding our earnings. That way, A, we have money in case something happens. And B, we'll probably just buy the dip maybe. Um. What else? What else was I gonna say? Oh man, I forgot. So yeah, actually, so fun fact, this VIX thing I just recently learned about. I didn't know that it's the fear index. I don't entirely know what cresting to the 30 mark is, but that scary, I guess. But again, if you're holding for the long term, if anything, if you're holding for the long term, now might be the best time to buy. Because again,
Mm-hmm.
like we've never stayed at the bottom. There may be times we stayed at the bottom for a bit, but never forever. We've always surpassed our highs. And as I stated, I've been stating this for like a month now. But with how much it seems like a lot of people are more into investing in stocks. Now, granted, that might just be my algorithm. That might just be, you know, YouTube, TikTok, X, whatever, putting me with other people who are, like me. I'll admit that. But
Mm-hmm.
it seems like a lot of people are more into investing. 10% of Gen Z and millennials sold crypto. So at least 10% are into that kind of stuff. But they might view it the same way I do. Buy the dip. But again, this advice, one, it's not advice. I lied. It's not advice, but not for day traders or financial or investment firms. Mm, they'll have to work with what they got here. But for the long term people, this isn't a problem. The soaring bond yields are a direct result of falling bond prices as the two move in direct opposite directions. This trend typically reflects the market's response to the Federal Reserve's effort to, quote, crush inflation, unquote, by raising interest rates. However, for the past 12 months, interest rates have been slowly drifting downward. This could indicate that investors believe that there will be rising interest rates in the future if the war in Iran persists. Okay, yeah, so I don't even know where I was gonna go with that. So now let's make the assumption that the war in Iran is gonna persist for a while. Iran and all the oil places over there are gonna see the 40 nations taking control of the Strait of Hormuz, and they're gonna dig in their mountains. Fine, whatever. We've got So that means the economy is essentially going to trickle down a bit more because 20% of the oil of the world's energy is not going where it needs to. The helium is not making the AI chips, even though we just got a what's it called? Didn't Google just make something where like their chips are more effective, so RAM prices dropped, whatever. Um, so one, chip manufacturing's on a halt, not a halt, but an issue. It's gonna slow. It's gonna slow down. AI is probably going to slow down a bit more because they're not producing enough chips. B, we already have we believe at least there's an AI bubble coming at least around towards the end of the year, so not very good economically. So the current volatility places the Federal Reserve in a, quote, monumentally bad, unquote, position where it must choose between two choices. Okay, got two choices. A, they can fight inflation, tightening monetary policy to stand against inflation, which which already worsens stagnation and risks a deeper recession, or B, supporting the economy, easing policy to fight unemployment, which exacerbates the inflation problem and further devalues the currency. With how much it says here that bonds are soaring. My money is that a lot of these people know, or they're making a huge bet on the fact that we're probably going to get some rising interest rates,
Mm-hmm.
which I don't know how
Yeah.
that. No, sorry, continue.
No, it's. I agree. It's the we're. You just got to bet on the long term. You probably okay. Most people who are one listening to this,
If you are listening to this, thank you.
yeah, most people who are listening to this probably aren't making enough money to where they're living off of their investments to where stuff like this would seriously affect their quality of life. It's probably for long term, like retirement funding. Um, so if that's the case, man, listen, if the stock market crashes or the stock market like dies, like dead and gone, we have so many bigger issues than whatever might be happening 30, 40, 50 years from now that it's not a problem anymore.
Oh yeah,
And
you
if
ain't
it
got to worry about it.
survives, well, hey, that's great. We're back to where we were, and you don't have to worry about it. Investing in the long term is the safest bet. All right. In the words of George Soros, panic right now, sell everything, freak the fuck out. So yeah, it's even if things look like the like we've got all the oil stuff going on right now, but like similar. Obviously, we're going to see a worse. I think people were predicting there's going to be a worse oil shock than what happened in the 70s. Um, but we're also reliant on oil in different ways now. I think we're more reliant, but the reliance is more diffuse. Like
Mm-hmm.
the kind of reliance that we're experiencing is less direct to the specific consumer, so you're going to get hit by it, and maybe not as like viscerally as a way as they did in the 70s. But you might like obviously it's going to hit your gas prices pretty hard. Um, but like I think just in general, people are going to just. I think we're going to be okay. I think we're going to make it out of this, even if it's going to suck for a while.
Oh yeah, for sure. I don't know, like we like last time or the time before we talked about how the Black I think it was BlackRock CEO stated that if oil hits $150 a barrel, going to be global recession. And I think, granted, it's X, take it with a grain of salt. But I think I just got a report or like a notification that said that they're speculating that oil's going to hit $200 a barrel, which is a little less than double what it is right now. If I'm mistaken, if it's still $100 a barrel, it's double. But again, we will recover. Probably. Again, like you said, it'll take time. But if you're in it for the long haul, either you're in it for the long haul, or we never have to worry about it again. Start stressing about how to start farming.
Hmm.
So get some almanacs or survival books, if anything. If you don't think the market's gonna survive this, then get some farming books. How to live off the wilderness.
How to live off the wilderness. Step one. It's so much harder than you think.
Oh,
You
absolutely,
can't
dude.
even begin to imagine.
Oh, I know, dude. Like when I was younger, I had to live with my grandparents during the summers a lot of the time, and granted they didn't farm to survive. They farmed and had enough that they would go into town and sell their excess crops. That's fine. But oh my god, one, it sucked. Two, you have to do it a certain way, cause now I learned this at a young age, but I don't think a lot of people know this. You don't plant all your crops at one time. That's stupid because all your crops are going to grow at the same time, and you can't eat all of your crops at the same time, so all of your food's going to go bad. You generally want to plant your crops 1 week apart from each other. So ideas like row one is okay. We're off the economic stuff. So hold on a second. Well, I mean it's economics. Economics was like Greek for like house management, whatever. Row one is week one. Row two is week two, and week one is all the food you would eat in a week. And then that's how you would do it. So you don't. Not granted, I'm not talking about industrial farmers. I'm talking about personal farming. But that's why you don't plant all your crops at one time. Apparently, a lot of people didn't know that. I learned that at a young age. Well, that's whatever. So you can take that little note to the bank. So, also, guns are your best friend. We like guns. Second Amendment. Buy ammo. Buy rifles. Woo.
Man, amen.
Amen. So, yeah. The next thing is up. So,